There was some unfortunate news for Apple stock investors regarding smartphone sales from foreign suppliers in China. I'm going to reveal the details of those announcements and what it could mean for Apple stock investors. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the news came out from CNBC that in November, foreign mobile phone shipments in China stood at 3 million, according to their calculations. And that's a fall of 47% from the same month last year, and a 51% drop from the October last year. So huge decreases in year-over-year sales of iPhones in China. Now, they don't break down individual figures for brands. However, Apple accounts for the majority of foreign mobile phone shipments in China, with competitors like Samsung forming only a tiny part of the market. So if we are to make the conclusion that, okay, if smartphone sales from foreign suppliers in China are down roughly 50%, and we make the connection to Apple and say, okay, Apple's iPhone sales in China are down 50%, which is a leap there. There isn't a direct connection that solidifies that is what happened with Apple's iPhone sales. But let's make the assumption or the estimate that's what roughly is going to happen when Apple reports their next quarterly numbers. So if that is the case, let's look at Apple's Greater China business. Now, in the most recent quarterly update, there was some encouragement because Apple's year-over-year sales numbers in China did not fall. They were flat, which was encouraging because they had been falling considerably. In the most recent quarter, Apple reported $15 billion in sales, and it was the same in the same quarter last year. Now, 15 billion out of 95 billion suggests that Apple's business in China is roughly 20% of its overall business, between 15 and 20% of its overall business. But if you look at these figures here, this is for the the 12 months, the most recently completed fiscal year. For the entire year, you can see Apple's sales in China were down by billions of dollars. And that's why the flat number in the most recent quarter was encouraging. For the full year, sales were down by roughly $6 billion, from $72.5 billion in 2023 down to $66.9 billion in 2024. So if you look at 66.9 billion on roughly 391 billion in revenue, you can see that Apple's business in China is shrinking and shrinking as a percentage of its total business. So it's becoming less and less important to Apple's overall success, the business in China. I think the growth prospects are now behind them. Sure, the business in China has huge potential. The market is large with the population of 1.4 billion people and the economy growing north of 5% annually GDP. But at the same time, you have the geopolitical concerns and the government in China and encouraging consumers to buy local and decouple themselves away from products from the United States, from the US. It doesn't look like the market in China is as attractive to Apple as it once was, maybe, let's say, 10 years ago or 8 years ago, before the first Trump presidency in 2016, when there was increasing geopolitical tension, the tariffs, etc., right? So as an Apple stock investor, I do own Apple shares myself, and I've kind of downgraded my expectations for what Apple can do in China, and the prospects for growth in that region I've kind of put to the side. And so in the upcoming quarter, I wouldn't be surprised if Apple reports another significant decrease in year-over-year figures from its business in China, given these numbers on smartphone sales in China and how the iPhone is falling behind. There was also reports that because of the slower sales, Apple's going to increase the amount of promotions it's going to offer in China to try and facilitate growth again in that region. It remains to be seen how effective those promotions will be or how much they need to incentivize consumers to buy the products. The good news is that Apple generates a healthy profit margin on their hardware products. Their profit margins are above 30% on their hardware sales, and then they generate profit margins of over 70% in the services business. So when you look at similar businesses that have that hardware and software component, or a component where the business sells something to get consumers into the ecosystem, and then they sell other products at higher profit margins once the consumer is in the ecosystem, Apple has one of the best businesses with that strategy. Other businesses are happy if they can get customers to buy their hardware at a break-even price point, right? So you imagine a company like Apple, for every iPhone they sell, let's say they sell it for $800, they're making roughly $300 of profit on that iPhone, depending on the make and the model. They're making roughly $300. And then when the consumer buys Apple Music or Apple TV Plus or buys something in the App Store, those profit margins are above 70% for Apple. So Apple would be happy if they can even sell their hardware, their iPhones, at a break even without even making that $300 profit, and then make the significant majority of its profits from the consumer over years when they pay for Apple Music, Apple TV, Apple Care, other items in the App Store. So they have a lot of margin to work with to try and facilitate at least a rebound, or at least at least a level of sales in China where it's not declining significantly anymore. If they can just be flat year over year in China without losing significant market share, like is potentially what's happening as of this report. Now, I recently did a video a couple of days ago looking at Apple's valuation and answering if the stock is a buy for 2025. And I downgraded Apple stock. I previously had it rated as a buy for several years. And I think I already mentioned that I own Apple stock. But I think the valuation has gotten stretched. The valuation has gotten ahead of itself. Given that the company's growth prospects are not that strong for it to be trading at a forward price to earnings near the highest point in the last few years, I think it's a little rich right now, given the troubles that Apple faces, given the headwinds that Apple faces. So this was unfortunate news for Apple stock investors. And given that the valuation is already stretched, if you're considering Apple stock, I had recommended that it might be more prudent to wait for a bigger dip in valuation before considering Apple stock to your portfolios. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.